Hi everyone, I'm Piotr Saczuk, co-founder and CEO of Stablewatch, and today I want to talk about all you need to know about yield stablecoins. So quickly about Stablewatch, our business got two main pillars. One is media, so you can think of news, blog posts, deep dive researches, maybe podcasts soon, who knows. And the other side is analytics. So all of the screenshots, all of the data you're going to see today on this presentation is actually coming from our website. You can check it out at stablecon.io, and it's available only there. So quick story, why am I here? I wanted to share that so you can have a better background, what we're doing at Stablewatch and where we're heading. So December last year, I exited my whole portfolio into stablecoins after running some small prop fund, and I realized two really important things. One, there was no place where I could get all of the news around the stablecoins, so I can educate myself, as my goal with stablecoins was to get exposure to yield and not that much exposure to risk. So in March this year, I launched the Telegram channel, which became the biggest one of this type with 1,000 users almost at this moment as our readers. And the other very big realization was that there is no place where I could get data and some information about yield-bearing stablecoins. So we have a lot of analytics when it comes to the payment ones, but even if you're gonna look at this conference and the names of all of the panels, keynotes, you're gonna realize that we just talk about stablecoins and we never mention yield-bearing ones. And when it comes to data, there was really big lack of anything just a month ago, really. So in April, we started working on some analytics, which I'm gonna show you in a minute. And now in May, just after 2 months, we have first revenue. So what helped us to go so fast? One big realization that not all stablecoins are the same. So here on this slide, you can see the market cap of payment stablecoins, the yellow one, and this line at the bottom, the more dark one, is yield-bearing stablecoins. So as you can see, this is still a very small category, so I want to tell you why we should care about it. But first, I believe that we need to split those two categories. So the stablecoin umbrella at the moment, under that, we're talking about payment-first stablecoins and yield-first stablecoins. And we, in my opinion, should separate that totally because it will help us gain much better spot on analyzing all of the data and thinking about those. So payment-first stablecoins, you all know them. It's Circle, Tether, USDC, USDT. They're crafted to maintain peg as closely as possible, or at least they should, to US dollar or whatever other currency they're tied to. They should be cheap when it comes to transactioning. The settlement should happen very fast. Typically, yield is retained by the issuer, and normally the mechanics are really simple here. When it comes to yield-first stablecoins, this is Ethena or Sky ecosystem products or products from Ondo, so you can think of SUSDE, SDAI, SUSDS. Here, those coins are not targeting peg in most of those examples. Actually, the price of them is increasing over time as they accrue yield, but sometimes they also target the peg and have other mechanisms to distribute yield to the holders. Those stablecoins are designed for holding rather than spending and using in transactions. And here, I wouldn't say that those are simple assets. There is variety of different mechanisms involved in here, and they're much more complicated. So if we're gonna start talking about those as two different categories, we really can gain a lot. So we can have a retail adoption because this framework, which I just shared, is definitely not comprehensive. It should go much deeper into how those assets are created. But this is how users are perceiving those coins at the moment, because users get exposure to stable coins mostly for two reasons: to spend them, use for trading, etc., or to get yield on top of them. So this simple framework is already existing in user minds, and that's why we should be, as industry and people who are building those products, also be thinking this way. Institutional adoption. Also institutions, this is mental model which is familiar to them, right? So payment products and yield products. So gonna be easier for us to talk to them if you're gonna start talking this way. Better UX, so wallets can be, or should be, in my opinion, showing those assets differently to provide more information to the users, what kind of exposure and risks are associated with those assets. And then when we're gonna think of risk associated with them, if we're gonna analyze them in the same way, we're not gonna have enough information to build those frameworks. So at the moment, all of the analytic platforms are looking at those coins in the same way. So let's take one measurement, transaction volume, for example, which is very informative when it comes to payment-like stablecoins, but it's totally not informative for the yield ones because they're typically held and not spent. So this is just one example, but one size fits all kind of analytics just doesn't work here, really. And when we're gonna build those frameworks, it's also gonna be easier for us to talk to regulators, which already are looking at those assets as two different things. So let's look closer into yield-bearing stablecoins. Here you see a chart with the market cap of the first movers who gained the most moat and dominance in the market. So those are products from Ethena and Sky ecosystem. So Sky ecosystem was first with their savings DAI, which launched, which launched September 23, and haven't get that big of a moat with comparison to their release later on product, SUSDS. And when it comes to Ethena, their launch in around March 24, so just a year ago, let's say, was an inflection point for the whole category to boom. And those three coins at the moment constitute for 60% of the total market cap of yield-bearing stablecoins, which is 6 billion. So what about the other ones? We counted at Stablewatch more than 100 of those assets. Just this month, I've seen 5 products launching interesting new mechanisms. So this number is growing. At the moment, we provide in-depth data of about 40 of them, and Stablewatch is the only place out there in the internet where you as a user can check all of the tickers and actually get to know what are those places where you can utilize your stablecoins and get some yield exposure. At this chart, you see market cap with 6 biggest yield-bearing stablecoins excluded. So you can see that inflection point here is really beginning of this year. So around the time Stripe acquired Bridge and people started being more interested in stablecoins. So really a lot of them are gaining pretty great traction recently. And for me, trajectory is really clear. There are gonna be more and more of those products. So while we are thinking how we should analyze them, we came up to the idea that the TVL itself is not that informative for this asset class. So we came up with the totally new metric, YPO, yield paid out, which I think the name is telling everything about it. So that's the real yields without any additional token rewards distributed to the token holders. And at the moment, 600 million worth of dollars been distributed to holders of those assets across all time, so around September 23. If you go to our website, stablewatch.io, you can check different time periods and analyze this yield paid out in few different ways. You can also see which projects paid out what amount of this yield. Very soon you will be able to also see where this yield is going to. So is it pendulum or what kind of addresses are the biggest recipients of the yield, etc. And also how the treasury works. So to see all of those interdependencies which are not visualized yet in the market. For example, Ethena holding half of non-maker or Sky issued SUSDS. And few words about the market growth. So the total supply of yield-bearing stablecoins is at the moment $10 billion, and that has increased 15 times from August 23. So remarkable growth, which seems to not be stopping. But still, coming back to this slide from the beginning of the presentation, it's just a small fraction, 4% of the general stablecoin market cap. So why should we really care about this asset class? Is it something tangible or is going to vanish sometime soon? I believe it's very important to stay close to what's happening to yield-bearing stablecoins, because I believe they're marking the shift from extractive models of financial networks, banks, and fintechs into more competitive markets where users are more empowered. So currently, banks, fintechs, let's say Venmo, for example, they got very extractive models with their network effects. So you put money into PayPal or Venmo, they got yield, so this risk-free yield around 4%, let's say, at the moment, take it home and leave you with nothing. And right now, while we're observing this infrastructure change and shift into more open market, where settlement of transaction is happening on-chain with stable coins on blockchain, I believe that more companies gonna come to serve us, and there's gonna be much more competition in this financial space. And that's why all of the traditional business models of banks or those fintechs need to be changed, because some of the companies are gonna pay this yield to us, to users, and empower us, so others will have to follow. And at this moment, most of the banks and those fintechs are earning on NIM, net interest margin, so thanks to this yield which they're getting on our deposits, and they will have to change those business models because they will have to give it out to users. And I believe this is already happening, so PYUSD from PayPal is already giving users around 4% of a yield, and I believe that this is not only customer acquisition technique, but actually validation of this thesis that they need to find out other ways how to make money. So what remains unsolved? There's still a lot of things to build. So I think at the moment the biggest problem is that there's no clear definition about yield-bearing stablecoin. So I believe long-term it's rather not going to be a one asset class, because most of those assets are not stable coins really. Those are structured products, and a lot of them are doing regulatory arbitrage, to call themselves like this. So those are structured products. Some of them work just as hedge funds. The other ones are T-bill wrappers. There are private treasury funds, etc. And users are not really aware of this because we labeled them as stable coins, and they're somehow tied to USD in most of the examples. So we have multiple different structures, and that's why also it's very hard for regulators to grasp this whole category. But the biggest problem at the moment, I believe, is lack of risk assessment framework. So as a user, in most of those protocols, if you want to use them, you will see deposit button out there. So your mental model is probably that you're entering savings account with your stables, but it's not what is happening. You're entering very sophisticated strategies which are exposing you to a lot of risk in most of the examples. So on all of those problems, we are already working on when it comes to Stablewatch. And we'll be releasing risk assessment framework and categorization for those assets sometime pretty soon. So what's next for us? This is our roadmap. Still this quarter, we're gonna support Solana with assets there and come up with treasury analytics for those coins which are listed on our platform. Later on in Q3, risk dashboard, or at least first version of it, should be live at Stablewatch.io, and end of year Q4, we're gonna be also providing more analytics on payment stablecoins. More analytics because actually we already providing some. So you can check out, for example, USD domestic money supply, so M1, M2 versus stablecoin supply on our website, which we launched as a first analytic platform out there before some others. So all of that's gonna prepare us to have a full coverage when it comes to the stablecoin market in the next year, both on the media side and both also on the analytics side. I'm super excited to also announce today our first client, Euler. I'm a big fan of their work, and I think this is the biggest comeback in history of DeFi. So we serve in Euler with API around those yield assets, and very happy that I can announce that here at Stablecon. And I'm also extremely happy about our strategic partnership with Plasma. So I believe that stablecoin is gonna change the world, and a lot of that volume gonna be happening here on Plasma. So we're very aligned with the Plasma team when it comes to those needs which are not accommodated right now in the market. So lack of analytics and lack of one place where you can get all of the informations about stablecoins. So this is why we partner up, and I can't wait to show you what we're gonna build together later on this year. And that would be it. Thank you very much. If you enjoyed that, you can scan the QR code to go to our website, or just go directly to Stablewatch.io. That would be it. Thank you.